Thank you, Mr. Chairman. Chairman Bernanke, welcome and congratulations on your confirmation.
Thank you.
Pleased to support you. Let me ask you, over the next few years, there's going to be more than $1 trillion in short-term commercial real estate loans that will reach maturity. And the ongoing credit crunch will make it very difficult for owners of viable commercial real estate to secure long-term financing. You know, in 2007, at this committee hearing with others, I said we were going to have a tsunami of foreclosures in the housing market. I was told that was an exaggeration. I wish they had been right and I had been wrong. And I see this as the next looming crisis. You know, it seems to me that the federal government failed to act on the warning signs about the home foreclosure crisis, and I'm very concerned that we're not acting on an increasingly clear warning signs about this commercial mortgage market. So I'm wondering, first, do you believe that this is a very serious issue facing us down the road? And make this emerge as our next economic crisis, and regardless of how you might characterize it, which I'll wait to hear what you have to say, what do you think that we can do? For example, I've been told that this is one in which community banks will face a fair challenge across the spectrum. Is, for example, allowing those banks to amortize losses over 10 years an option so that we don't completely dry up lending and at the same time maybe have a lot of these institutions close as a result of it? I'm looking to get ahead of the curve, but that curve is coming, that tidal wave is coming really soon, and so I'd like to hear your views on it.
Senator, I share your concerns about this. This is yet another place where the Federal Reserve's oversight of small and regional banks has been very informative for us. We've been able to follow the situation closely and to look at its implications for the broader economy and for the financial system. It seems likely that small and regional banks will be facing a lot of challenges from losses on commercial real estate, and the bank regulators are watching this very carefully because it's going to be put a lot of pressure on some banks. Chairman Baer, I think the other day, put out a list of problem banks, which has been obviously increased, and one of the key reasons for that is the commercial real estate issues that a lot of small banks are facing. It has the implication not only of putting pressure on the banks, but if a small bank has lost capital because of its losses in commercial real estate, then it doesn't have the funds to make loans to small businesses, for example. So it can permeate, it can affect the broader economy as well. Just a few comments. I mean, as I said, we are very alert to this. We are concerned about it. We and the other bank regulators have tried to address it. We have put out commercial real estate guidance to the banks, which attempts to address the question you raised about how to deal with debts that are coming due. And that guidance, its main purpose, one of the main purposes, is first of all to avoid unnecessary write-downs. So one of the guidances we give is that a commercial real estate project that is able to make the payments but whose collateral value has declined should not necessarily be written down for that purpose, for example. Our guidance also helps give specific examples and helps banks see how they can restructure loans, just like we restructure residential mortgages, in ways that will keep the loan current without having a major write-down for the bank. So we've been doing that as bank regulators. We've been trying to find solutions. I also want to mention the TALF, again, which is still open for commercial mortgage-backed securities. We have had a bit of success in bringing down commercial mortgage-backed security spreads and in starting up some activity, including activity outside of the Fed, in creating new CMBS securities. So we are very focused on those issues, and we've addressed it in a number of different ways. I think I want to end with just a little bit of, I wouldn't say good news, but lately the evidence on commercial real estate is that there seems to be some improvement in some places, that the fundamentals are a little better than we had feared in some cases as the economy has done a bit better. And as we said, we've seen some more progress in the CMBS market and in banks' ability to restructure loans. So I think still, I mean, I don't disagree with your initial characterization that this is a very, very serious problem that we have to continue to monitor. But I would put forward just a sliver of optimism recently in terms of some improvement in the outlook for that category.
I may briefly follow up, Mr. Chairman. Chairman, I appreciate your answer, and I appreciate the guidance that the regulators have given. That's somewhat helpful. I'm just concerned, and I'm happy to hear that there's a sliver of a silver lining here about some improvement in certain sectors, but my sense is that that is not going to meet the challenge before us. And I hope that we are thinking prospectively about what else we need to do or be ready to do, because it seems to me that if the worst case scenario happens, and I have to be honest with you, I've heard from a wide sector of community banks, and I've heard from a wide sector of those who are in the commercial real estate market, who tell me that there isn't a market out there for the renewal of these mortgages. And as such, it could be a body blow to this economy at a time that we are seeing recovery take place. And that would be hugely unfortunate, so as well as consequential in a very real way to our overall economy. So I'd love to continue to engage with you on figuring how we are going to continue from all different levels, not just the Federal Reserve, but we've also talked to the Treasury about this. We need to figure out how do we best meet this challenge, because it is a challenge that is coming. And while, you know, those who are maybe irresponsible beyond a certain degree will have to face the possibility of closure, the breadth and scope of this is something that I'm afraid of, the consequences of what it means to our overall economy.
Thank you. We're very focused on it, and we would like to work with you on it.
All right. Thank you, Mr. Chairman.